Good day, fellow deal makers. Welcome to the Deal Scout. My name's Josh, fellow deal maker. All right. I use this show. The mission and purpose of the show is to put deals and deal makers together. So what I do is I interview them, hear the stories, hear how they got started, share some advice for you. But at the end of the day, I want you to listen in and find the kind of deals that you want to be involved in, and then go to the show notes, find their contact information, connect with them, and do a deal. Mission and purpose of the show. So let's dive in with Mr. Ray Drew. Ray, welcome to the show.
Thanks for having me.
All right, Ray, who are you and what the heck do you do?
I am an SBA lender. I've been doing it now for 11 years, working with entrepreneurs who want to start, grow, and expand their business using the SBA 7A program. I've mainly done it at non-bank lenders, which is a little bit unique of a situation, but I've been doing it now for over a decade and I love it. Couldn't ask for anything better to do with my life.
Oh, it's cool. All right. So how did you get started in this business? And then we'll get into tactical, who does this work really well for, and how to go about doing it. But let's go back to your origin story. How did you get started in this game?
Well, I kind of fell into it, which is very common in our industry because no one really grows up wanting to be an SBA lender. You know, it's always doctor, lawyer. I just knew I had to go to college. That's what my family was pushing. And so I went to a university here in Florida, UCF, and I majored in marketing because I had one older friend and I said, what's the easiest major? And she said marketing. So I did that. And I took a internship with a company. I did it for 4 months, stuffing envelopes, just doing all sorts of different menial tasks. And then I left. I had no idea what the company did. They called me about a month later because I had just graduated. It was like 2011 and economy kind of sucked at this point, but they offered me a full-time position and I liked working there. It was about 25 people. It was a small business, much different than the other internship I had done at Lockheed Martin, which was just a huge company. And so I liked the vibe and I was like, hell yeah, I'll do it. And it turns out they were an SBA lender. And so I started there. Basically, my goal was to make 100 cold calls a day to commercial real estate brokers trying to pitch 504 loans, which is an SBA program. Not ever done one or really knowing how to do one, I just was trying to make calls and kind of cut my teeth that way.
Wow, cool. Yeah, I was in an industry where I had to make 100 calls a day. Pretty much, here's the phone book, go, right? And they would monitor the calls and such like that. Do you still remember your pitch that you would do? Like, is it like engraved in your brain?
Well, I paid a lot of attention to it. I was very mindful of making sure I sounded not like a 22-year-old that didn't know anything. So I'd always make my voice nice and deep, and I would just try to make it sound not like a script, even though I had a script. And I made the script myself and I just kept it short. And it was warm calling because they were kind of folks that were in our network. They had been at a show with us or we've spoken with them before. And so I would just try to make it seem like I was their buddy checking in.
Awesome. All right. So give us an idea of what did you learn making 100 phone calls a day, outbound calls a day, because to some people that terrifies them. They would rather, be stuck in a cave underwater than making 100 calls a day. Like what is something that you learned from that experience?
I loved it. I mean, there's a lot of highs and lows with it. You'll get hung up on, but you'll also get business from it. And so there's really no worse or better feeling than those two things. So that's one of the things I learned. The other thing I was doing was there would be people that would call the company wanting the business to do business with us. And so I would also be the sole person talking to them. And sometimes they would be like a mortgage broker. And sometimes they're kind of amateurish, but sometimes they actually knew what they were doing. And I remember early on, I basically learned not to BS my way through a conversation the hard way, because this broker who actually knew what he was doing was asking me questions and I was just making up answers because I didn't know them. I didn't know at that point to say, you know what, I don't know. Let me get back to you with the right answer. And so he hung up with me. And then like about an hour later, my boss, who was the CEO, called me into his office and he was a nice guy. And he was like a good mentor. But he sat me down and played a voicemail for me. And it was this broker just laying into me in my boss's voicemail about, I remember that like it was yesterday. He was like, he called me a clown and that I basically I didn't know what I was doing, and he was right.
Yeah. What a great so during it, right? It's tough, it's embarrassing, but it's just like the learning lesson from that. Like 22-year-old, I didn't know anything in my 20s or 30s, right? I'm in my 40s now and I'm just starting to figure life out and figure out business. But like we think that if we're selling something, we need to be the expert on it and we have to be have an answer for everything. But what that does is it makes us look like a clown. How do you approach it differently as you gotten a little bit older now and more experienced in doing this for 10 years?
Oh yeah, my approach has completely changed. I started focusing more on marketing and pulling folks into my orbit. And at now I don't really do any outbound kind of outreach at all. And I'm, very high producer in the SBA world and in my company, top producer, many of the years. And I do it in a way that's very unique compared to the way my other colleagues in the industry do it. Because there are many ways to get here, but the way I have done it is, one, I started a podcast. Okay, that is a really good way to
Brilliant.
position your. I'm preaching to the choir here, I'm sure.
Yeah.
But I started getting very active on LinkedIn content marketing in 2015, which
Yeah.
not a lot of people were doing in my industry at the time. And I started an email blast that at my bank in 2013, which they, spoiler alert, I was doing it without their permission because they wouldn't let me. They didn't believe in them. And I was like, I'm not going to not send email blasts because the bank doesn't believe in them. And so I got my boss's blessing, and I probably shouldn't be saying any of this stuff, but he's like, just do it. Just don't get caught. And it was one of the most fruitful things because none of my colleagues were doing email blasts at the time in 2012, 2013, because everyone worked at a bank and everyone was afraid of liability and it was just new. And now everyone does it. But at the time, I knew I can hit send on my database with a nice curated email specifically meant for that audience with a catchy headline, and I would get business consistently. If I needed deals, I would just click the button and the deals would come, and that helped propel my career.
Yeah. Yeah. I think, I've worked at banks, I've worked in corporate America, and I've worked with, large organizations where it's like compliance is like ridiculous. If I want to send an email to my mom through my work email, like I had to like get 13 people's permission and a VP to sign it off somewhere. But I took a similar approach. I'm like, listen, if you guys want me to be successful, I can't follow the ways you guys have done it and have always done it because it's no longer working. I have to figure out my own ways. And it's worked out well, but there's some risk as you're approaching, like as you were doing that, you were weighing the rewards and the risk. And how did you decide to go, nope, I got to do it myself, hit send? What pushed you over the edge to say yes?
Well, I mean, I I wouldn't. I had a really good boss at the time. I actually had two while I was there. Both ended up being two huge mentors for me, and they knew it was ridiculous. This one of the two, and he's like, "You're fine. You're not going to say anything that's going to get us in trouble." you know, so and it's really like I'm just saying the same things I would say to you if I was in a room with you. I'm just putting it in writing and sending it through an email blast, through Constant Contact or whatever.
Mm-hmm.
So it's just like what I'm doing with the podcast. Like I work for non-bank lenders because they are more understanding of how I go to market. And so there's, versus at a bank where I could barely get a guest on my podcast and give them free exposure because their bank says no.
Yeah.
So
Yeah, I've experienced that.
So yeah, so my boss basically, I wouldn't have done it behind his back. So he said it was fine, and I just knew I had to do it because I knew that was where things were going. And I'm not talking about 1999. I'm like, things were already there. It was 2013. I'm just like, we have to be doing this.
Yeah. Hey, don't worry. We're recording this in 2022. Statute of limitations has passed, my friend. All right. So I think I'm not a
The bank
lawyer.
doesn't exist anymore, so I think I'm good.
Because you sent all those emails. No, I'm just kidding. It was you. Let's ask this question because I think a lot of times business lenders and financial, advisors and stuff in the industry, have a hard time marketing themselves because they themselves view their product as not the most exciting thing. But you said I used to send catchy emails with catchy headlines with a conversation just like I would be having face to face with you. So give us some tips or maybe some examples of things that you did that got people's attention via an email.
Well, first they have to open it, right? So, I one of these books back here is about copy, email copy, and the book says, and it's I could probably get it to you later, probably like the art of, email copy or something like that. But
Yeah.
it's they recommend keep the subject line to 5 words. I would do something like this. What not to do when applying for an SBA loan, right? It just piques some interest and you're like, oh, I want to know what that is. And if it is something negative versus positive, there is a little bit more inclination to say, what's this drama about? And they even did a study or a test where they made the subject line just 1 word, and it got some of the best results. So there's a couple things you can do just to switch it up. What I started doing, which turned out to be less effective, was basically using the subject line to kind of title or summarize the email versus my intent to actually spark some interest and get them to click it.
Yeah. Yeah, I did marketing. I worked at a company that did marketing research, and we tested subject lines. We tested emails. Right. The purpose of a subject line is to get an open. The purpose of the message is to get a click. The purpose of so it's like takes you through this process of micro yeses to get to the big yes. Right.
Exactly.
So I love this conversation. You and I could probably nerd out about it, especially because you have a book about email email copy. You and I could probably hang out. Where are you located? You mentioned UCF and Orlando.
I'm in Delray Beach, Florida.
Okay, we're in Ocala, which is not too
Oh,
far. I think it's like 2 hours or something like that.
yeah, that was my first deal was in Ocala. And this was crazy because I was 23. The bank made you wear a suit and tie. And I think this was maybe my first or second loan. I think no, it was my second loan. And it was 2.3 million and industrial building purchase and renovation. It was actually a bank owned building. And the buyer was a fabrication company. They basically fabricated the fire truck,
Yeah,
like
E1
fire trucks.
maybe.
No,
Oh, okay.
but anyway, I mean, and yeah, the guy was great, but he needed to close in 30 days. And on an SBA deal at that point in time, that was like impossible. But we said, you know what, we can do it. And so we beat out Wells Fargo. I was literally driving to Ocala. I mean, every week, because I was like, I have a term sheet for you, but I'm going to give it to you in person. I'm going to collect the signature while I'm there, and I'm going to take it back to my bank. And then I did the same thing with the commitment letter, and we closed it on, I think, the 29th or 30th day. But I just remembered showing up there with a loose fitting suit, and I couldn't tie the tie, and I got to sit in front of this 50-year-old guy, and he went with me, and it worked. It paid off for both of us.
Yeah, super cool, man. Good job. So the first deal you did, my hometown, Ocala.
Oh
Right
yeah,
on.
I did
Right
a
on.
couple up there. Yeah.
Ocala's a great place, great country of Ocala. So as you're, working for non-bank, lenders and moving into your organization now, what does over the past 10 years, what did your progression of your career look like? What have you learned? What, in terms of as a deal maker, how have you evolved?
A ton. Yeah. It's a great question. When I left that bank, and I left because it was like just brutal. It was old school. Getting a deal approved was like impossible. And my boss had left a few months prior to go and start a new non-bank lender. And that sounded intriguing to me. Startup, building something. And so I was his first hire. Actually, he had 2 hires day one. It was me, and the other guy was the guy I beat out at Wells Fargo on that other deal I just told you about.
Hmm.
So we start together, He lasted about 9 months, and then it was me, and we just kept building. And so over 6 years, that is where I really learned it, because that shop was basically built on the infrastructure of a company called CIT, which was a behemoth SBA lender before 2008. And their credit people were just super smart. And I just absorbed things like a sponge. And honestly, that's just where I learned everything about deal making. The sales folks, sales managers, the whole team taught me so much. One of the main lessons I learned, probably in my fourth or fifth year there, was about just the art of selling, the proposal. Like, a lot of SBA lenders will just rush to a proposal and send out the proposal, and then a couple of days would go by and they'd be like, hey, following up on my proposal, and then you're chasing down someone with your proposal. You have no idea if they're talking to other lenders. You have no idea if this is the right fit for them. You have no idea. So drilling deep and uncovering the hurdles up front, and establishing yourself as an expert, and asking the tough questions up front, gaining, like, pre-selling the terms, basically, to say, like, I'm crafting this proposal for you. It's based on our conversation exactly what you want. I'm going to assume you're going to just accept it. And if not, let me know why you wouldn't, and try to figure that out up front, and let's handle it there, so that he doesn't take my proposal and go, shop it all around town, because that is something that helped me increase my conversion rate a lot.
Yeah. Versus people who, maybe just looking at it as a numbers game. Let me get a proposal out to as many people as possible. You're like, let me get the right proposal to the right person, craft it in a way, pre-selling it, assumptive closings. If I get this, will you say yes, kind of thing. Because of that, you said you hit, top of production for your company for multiple of those years. How are other people, what are other ways that other deal makers are doing incorrectly? So you mentioned the proposal, the spray and pray, right? What other ways are other lenders or other deal makers doing it incorrectly, in your opinion?
Well, when I issue a proposal, and this is how, there's two schools of thought on this. We issue a proposal because we have a very high confidence that we can execute, get a final approval, and get this thing closed. Okay. That's one school of thought, where your proposal carries that weight. That's how I do it. The other school of thought is, let's just reel this guy in, right? Let's just put out a proposal. Let's get him off the street. Let's bring him in. Let's collect a deposit, and then let's see what happens. I'm very surprised how many people still do that, and I run into it every day. They also sweep some of the issues up under the rug, and because they don't want to scare off the bar, they don't want to tell them that, no, that's not going to fly. I mean, I'll give you an example. I was working on a business acquisition for someone. They went with another lender based on their term sheet. A couple days later, they're in underwriting. The underwriter's like, oh, by the way, these guys are going to have to guarantee a loan. Okay, well, that's not going to fly. So now I'm back to square one. Then they came back to us. I have countless examples of that, but it's like I said, lenders don't want to rip the Band-Aid off and tell them what they don't want to hear. You're going to put a second lien on your house, if you have equity in your house. The interest rate is variable. That's how it is. And, if you are upfront with them, and if they're ultimately not comfortable with it, then you're going to save a lot of time. But people are just afraid to rip the Band-Aid off.
They're afraid of a no. They're afraid of not telling the person what they want to hear versus telling the person what they need to hear. Right. I think that gets us into trouble as salespeople. We're like, oh yeah, we can make this work. And then it gets down to it, and you're like, we couldn't make it work because it's unrealistic terms or whatever the case may be. Super awesome work, man. I think I'd like to hear, a little bit about why you started your podcast and, the direction you took. In the industry of SBA lending, is there a great interest? Is there a lot of traction? Is there a lot of movement? How are they applied? So give us the thinking behind the podcast itself.
Hey man, you got some great questions. I got to hand it to you. I can see why you've been so successful in the podcast game. I'm going to steal some of this from mine.
You just became my best buddy. Thank you. Awesome.
So I started the podcast for two main reasons. One, I was looking for the content myself. I'm obsessed with SBA lending. I am obsessed with it. It's what I think about. It's like a sickness because I can't stop thinking about it. It's really, it's a problem. I've thought of, seeking out help for it, but I love it. I think about it even when I'm sleeping. I considered getting a tattoo at one point, but I don't have any tattoos. But anyway, so I feel very blessed to be in the industry and have fallen into this career. I mean, truly, I say this all the time. And I was seeking content to be better at my job, even though I was already decent. I wanted to just keep consuming content as a millennial, likes to do online, and it wasn't there. There's no traces of SBA anywhere. It's like crazy. So I was like, you know what? I'll just build. I had it on my to-do list for probably at least 9 months to a year, like start a podcast. And I would always get the to-do list down to everything except for that. And then one day I'm just like, let's just do it. We started the podcast, and it's a way for me to give back to the industry that's given me everything. So I literally give all of my secrets away to the industry. And I started interviewing high performers in the industry to kind of tap into their minds and just get the content out there because just no one else was doing it.
Yeah. So by the way, give a shout out to your podcast. What's your podcast name?
The Art of SBA Lending.
The Art of SBA Lending. Now I'm looking at the featured image. You're wearing a fitted suit, dude. You look sharp.
That's off the rack.
Okay. Because back in the day, you couldn't tie a tie, and you drove back and forth from Delray to Ocala. You look sharp, dude. You come a long way. You did
nice. Now you're sucking up to me.
Yeah. That's how this works. You give me a compliment, I give you a compliment. So, so you started this podcast 2019, and you started interviewing other industry experts. Have you found that some people are super open to kind of open kimono and share the secrets of becoming a SBA lender success versus some people who are more hidden and like, no, I don't share it. I don't want to share this with the competition. What if they copy me? That kind of stuff. What have you experienced?
Of course, but overwhelmingly, people are willing to give it away. The people in our industry, I'm telling you, are special. Maybe everyone says that in every industry, but everyone in our industry loves our industry. No one like leaves it. We love everyone knows each other. Everyone's connected by 2 or 3 degrees of separation. It's a very small industry. So no, overwhelmingly, people are willing to share. The part that's a little trickier is just like bankers are not used to getting on a podcast and talking. And so getting people comfortable like you do with your guests so well and willing to share that's been my hardest part, because they're just not giving you the same transparency as if you're just in private conversation, obviously. But like, it's even more so, I feel like, because they're like really in like interview mode, and it's just different. I really want to try to get better at getting people to just open up a little bit, but then, and get them, because they're like, oh, the bank is going to be watching this and I don't know what I should say and not say, but it's a friendly thing. And I just want to try to get better at getting on the more personal side. So that's why I'm taking notes from you.
Well, I appreciate that. There you go again. How many episodes have you done since you did your first launch?
80.
Awesome.
I just recorded my 80th today, and it was not extremely consistent. At first, it was, if I had time on the weekend, I'd do an episode, but I think the last, maybe 40 or so episodes have been weekly, and I brought in a producer to help me, and that has kept me on track.
Yeah, super cool. Yeah, it's so good to get help so you can focus on your art and then have other people that help you with theirs. What was the funnest or most memorable moment in your podcasting career?
I don't know. The podcasts have been pretty tame. I would say this, because the industry is really small, when I go places now, everyone knows who I am, and I don't always know who they are. And it's like a weird feeling, but, that's like, like the other day, actually, the feedback I've gotten has been by far the most moving part of this. Like I said, I was at a SBA conference, a couple weeks ago, and somebody, is pulling me, hell, you have to meet this person. And they're like, oh yeah, this person at the bank is doing your, first 90-day plan that you told us in the episode. And, these are people I've never met, and they're taking what I'm saying to heart and implementing in their day to day. And that feeling is amazing.
Mm-hmm. Yeah. Um, Super cool. I'm going to ask you a bunch of podcast questions. Do you have a mobile kit? So you have a great Shure mic, just like Joe Rogan, great setup. So for you guys listening, let me like paint the picture, dude. It looks great. He has, his boom arm with a nice Shure mic in the background. He has, his pictures of something behind him. I can't really see, but there's some lights and bookshelf. Looks great, dude. You're absolutely crushing it. Do you have a mobile kit? So when you go to these conferences, you're interviewing people and such like that?
Yeah, I just did my first ever in-person interviews at that conference. Actually, I got a nice suite upstairs and I set it up, and I'm going to be doing a lot more of that over the summer. I am going to Tampa to do a couple, and they actually opened a podcast studio down here in South Florida that looks really good. And
Nice.
You can rent it by the hour or, monthly subscription, and it looks very nice. They have three cameras, 4 mics.
Yeah.
And so I'm going to also schedule some interviews there. So when I'm taking the summer off, and I'm going to relaunch in the fall with a string of probably 8 in-person interviews.
Super cool. What's one piece of equipment or like gear or something that you're like, man, as soon as we hit this next big business goal, I'm buying that. Like, what do you have on your horizon?
The camera, I have a Sony ZV-1
That's
vlogging camera.
that's what I got.
Yeah.
Yeah. So you want to get something bigger, better?
I think I want to get something better. Yes. Or I think, I'm not sure. I want, cause like when we did a 3 camera setup. And so we used a phone, the Sony, and then a really nice camera that my producer has. So when it was on me, I looked great, and then everyone looked normal, like with the other cameras. So I think we have to kind of upgrade one of the cameras or downgrade one of the cameras so it's more consistent.
Yeah. Ah, super cool. All right. I nerded out for a minute, man. I love this stuff. I've been doing it for a while, and it's just so fun, man. You get to meet cool people, cool experience. And like you said, man, you walk around an event and people are like, hey, you're the guy from your podcast or LinkedIn. And you're like, yeah, it's cool, man. It's fun,
Yeah,
isn't it?
it is.
Talk to us about the first time you hit publish, right? So you did your intro or you did a recording, and the first one, what was going through your head? What fears did you have, or what hesitancy, or did you just record it, let it rip and roll?
I didn't have any thoughts, but now I'm second guessing myself. Maybe I should have. But I have uploaded the raw content twice, and I do a script. Sometimes I do like a scripted monologue, and it's just really ugly, and I'm like silly, and I'm like, I'll edit this later. So, but when that raw footage sees the light of day and people listen to it, that is the most cringe moment. This is part of the reason I got the producer, and she uploads it now.
Yeah. So as a podcaster, and I've done this 1,000 times, I can't go back and listen to myself. Like I'm like, oh, I start critiquing myself, and I'm like, I should have done this, I should have said that, should have asked that. Do you go through that, or do you go back and listen to your
This is gonna sound weird, but I listen to the monologue episodes where I am giving my advice, and I'm like, this guy's smart.
This guy's awesome.
He knows. Yeah, that's a good. I forgot about that. Yeah, no, that's good. Yeah, I do listen to my own podcast.
Yeah, that's good. That's good. My mom probably listens to mine. I don't even know. So as you're building this out, I love this, man. Thanks for chatting with me about that. I don't get to talk to many, experienced podcast hosts, but you started and you said, I'm obsessed with SBA. Like if there was an SBA anonymous, like you would go and you're like, I would even get an SBA tattoo. So what would, this is a funny deal question. What kind of deal would be necessary for you and I to go get an SBA? I'm not going to get an SBA tattoo, but I'll get another tattoo. But for you to get one, what size deal do we need to do to make that happen?
There's no deal. I mean, I could only go up to 5 million, and a $5 million deal would not get me there. So I'm sorry, you're on your own on that one.
Okay. Well, I'm getting an SBA lending tattoo then when I do a $5 million deal. So to your business, let's talk in the details about SBA, right? For SBA lending, what can you use this for? Who is SBA lending for? Who needs this?
So the SBA 7A program, that's the flagship. That is a program that's been around a while, and it was really created to ensure that small business owners had access to capital on reasonable terms. So the idea is you go to your bank, they say, no, you don't have enough collateral or this or that, or you don't have enough money for a down payment. Let's have this program here to help those entrepreneurs get the financing. And it's a job creation program. So that's why the government put it together. So it's a public-private partnership, probably one of the only ones that actually works. And they partner with private institutions, mostly banks, and then also 14 non-bank lenders to provide these funds to small business owners. It's up to $5 million. And behind each loan is an SBA guarantee where the SBA is saying, we're going to take on 75% of the risk usually in the case of a default, essentially. And so small business owners can use this program for a variety of things. Pretty much anyone who owns a privately owned business is going to be eligible. You can't be a nonprofit. There's some things that disqualify you. It can't be for investor real estate, and it can't be a church. It's got to be a privately owned for-profit business, but 99% of them are going to be eligible. 99.9 maybe. I've done a company that had $100 million of revenue. They're getting a small business loan. So it's based on certain things, but most of them will qualify, and you can then use it to start, grow, expand, buy a business. Right now, the SBA 7A program, majority, based on what I heard at this conference, is being used to buy real estate for your business. So you own a business, you're renting, you want to buy the building or buy a bigger building to grow into. You're using the SBA loan, and then also business acquisition. Those two things, according to the SBA at this conference, represent 75% of the overall program, which is a $24 billion a year program. So it's very huge. And that just tells me business acquisitions are off the charts right now, which is no surprise because baby boomers are now at retirement age. A lot of them own businesses. And, when you go to retire and you own a business, you sell the business. And so the SBA is the main financing vehicle to get a buyer to purchase the business in that kind of under $6 million price range.
Okay. So in the mechanics of that, what does it typically look like? All right, I have a small business and I want to get an SBA loan to buy the building that I'm working in. Kind of walk me through high level. What are some of how do I know it's a fit for me or not a fit for me?
If you're
I'm
buying
not a church, by the way.
All right, let's say if you're buying a building for your business, you could go conventional. Okay. You go to your bank and you put usually 20% down plus cover the closing costs. You're getting a loan with, maybe a 20-year AM, maybe it's a 5 or 7-year balloon. And there might be some loan covenants in there, like certain debt service coverage ratios that you have to maintain. And you're going to get a nice low fixed interest rate probably. And so that is one option. Then there's the SBA, and the SBA has two programs that would allow for this, the 504 and the 7A. I focus on the 7A. The 504 is also a good option to consider, but the folks I work with like the 7A because you can finance up to 100% plus access additional funds to grow. So it's a very enticing program for businesses that are in growth mode. Tying up 10% even is going to set them back in their growth plans. And not only that, maybe they can get some working capital in addition to the purchase to even add some fuel to the fire for that growth. So those are the folks I work with for the 7A.
Cool. Super cool. When it comes to how do I know I'm meeting the requirements, could you walk us through some of those, what those look like? In terms of maybe how long the business has been established, what kind of revenue targets am I looking at based on the size of the loan? Maybe I'm an entrepreneur through and through, and I've had some ups and downs in my credit. What does that look like? Those kind of things.
Yeah. And the SBA, they keep it pretty simple, and they have a SOP, standard operating procedures, and it kind of gives you the minimum of what you need to do. But most lenders have an overlay of what they require on top of that. And every important to note, every lender is going to look at things differently. It's not a cookie cutter program. The credit appetites are going to be different from institution to institution. How they structure the loans will be different. The types of deals they want to do and their process all are going to be very different lender to lender. And that's why it's important to partner with the right person who's a good fit for what you're trying to do. So all those things are looked at. Cash flow is king in SBA. So we look at debt service coverage. So that's first and foremost. So if it's an existing business, buying real estate, refinancing debt, or you're buying a business, we're looking at historical financials. And that's where the crux of SBA lending is. And you're looking at 3 years tax returns, year-to-date financials, and we're trying to basically crunch the debt service coverage and understand how much cash flow is available to service the debt based on these historical financials, particularly in the last year. So that's one. You're looking at credit. Okay. So you do look at personal credit, basically assessing character issues. So, what you said, if there's a bump in the road, and you've recovered and it's an isolated incident and there's a story, even if it's a bankruptcy, there are lenders that will still consider that as it's not a character issue. It's not like you're just late on your mortgage every 3 months. That's different. So those are some of the qualifying factors, but it's really like a lender looking at the deal in its entirety. What's the collateral? What's the cash flow? What's the credit? What's the cash? And what's the industry? And they're trying to weigh the pros and cons and try to make an overall credit decision based on everything.
That's cool, man. So to be top producer in the SBA 7A world, right? Small circle for you guys and gals who are doing these kind of deals. What's it take? Like, what kind of volume, does it take to be a top producer? What kind of numbers do you put up on the charts to get people to start paying attention?
It's gone up a little bit in recent years, because it used to be like, 8 to 12 would make you just a solid BDO, right? $8 to $12 million in annual production. Now, I think probably 12 million is what people would consider solid annual production. If you're over 20, you're a high producer. You're just going to be a high producer at your shop. If you're over 30, you're really, now you're in some rare territory. And then there's people that do 50, and there was even one person on my podcast that did 100. There's somebody that I know that also did like 150.
Wow.
Last year I did 45 million. This year I'm probably on track to exceed that by, a few million probably. And I think, to put it into context, like if you look at, some of these, that's more production than probably 50 million would probably be more personal production than probably 80% of SBA lenders, like entire production. If you're doing 200 million a year as an SBA lender, that means you're probably maybe top 25 in the country as a shop doing 200 million. So just to put it into context. So if you had, and that's usually a sales team of 10 people. So, you have 10 people doing 20 million. That's an ideal situation for a lender. So if you see somebody doing, 40, 50 million plus, they're top 1%.
Nice. So as you're doing this, what's the future of your career look like? Like, what do you, as a deal maker, what kind of goals are you working towards, personally?
Right now, I just transitioned into a player coach role at my company, Fundex, it's a non-bank SBA 7A lender. And so I've hired 2 BDOs, business development officers, and I'm going to be hiring one more, and then I'll have that'll be my team. So player coach means I'm producing and I'm also managing. And this is kind of my first foray. I don't know why I decided to use that word. I never use that word.
Great word. Foray.
And into kind of management, even though everyone told me not to. Everyone said, you're living the life as a BDO, man. You're your own boss, basically. You just do what you do, and it's just a great life. And, I agree with that, but for where I want to go, you're going to have to accumulate different types of skills, and management is one of them. So I'm kind of figuring that out now. I'm 33, so I'm still fairly young in the industry. And I think ultimately I do want to build a shop and, just keep growing professionally, see how far I can go.
What is a perfect deal? So you and I are hanging out in a coffee shop in Delray, right? And someone walks around the corner and they're like, "Hey, I got the perfect deal for you." And they lay it on the table. What's it look like?
So with the 7A program, you can do a lot of things. You can do a startup franchise. You can do a commercial real estate purchase, partner buyout, business acquisition, equipment purchase, debt refinance, open a second location of a restaurant. There's construction, there's all these different things. What I've done over the years and have continued to do is make my box more and more narrow to focus on just what I want to do and what I'm good at. And right now I'm down to 3 kind of sub products within the 7A where I'm doing business acquisition. So it's all the same customer. It's somebody that buys the business, and maybe they buy it or start it and they have partners. Eventually, maybe they want to buy out a partner. So then that's another loan. So you can do a business acquisition, partner buyout. And then when they want to buy their building, I'll do the building. So those are my 3 things, but mostly focused on business acquisition right now because it's just blowing up and we're really good at it. Because in the SBA world, there's very few lenders that will do a business acquisition. When you get up to the $2, $3, $4, $5 million range and there's no collateral in sight, 90% of these SBA lenders just will get squeamish. Like most SBA lenders will have an artificial cap on the amount of unsecured loan exposure that they'll finance. And then anything after that point, whether it's $1.5 million or whatever, it's just an automatic no. So we're one of the few lenders that is collateral neutral and cash flow focused. So I know I've got the best product for most of these folks buying a business. Execution is always very key for them. Speed, certainty, and just being able to get it done. And so that's what we deliver. So of course I want to work with the folks that need me the most. So anything in the $1 to $6 million range, that's a business acquisition in just about every industry is something I'm interested in.
Super cool. Super cool. So let's do a little plug here for people who want to connect with you, do a deal, especially if they're looking for, you mentioned 3 and I missed one of them: business acquisition, commercial real estate, and there was one other.
Partner buyout.
Partner buyouts. Cool. So, hey, if you don't like your partner, you might want to get an SBA partner with the SBA.
Not
7A.
if you don't like them, but yeah, you get the idea.
Yeah. Partner buyouts. Someone's getting older. They want to move
Right.
on. They want to focus on some other part. They're moving, their spouse is moving, whatever the case may be. I'm just kidding. But where's a good place for people to plug in with you and do a deal?
Yeah. Well, first, I just want to mention, since you're allowing me to plug. So I was on YouTube the other day and I was searching for SBA and I saw a ton of misinformation about SBA lending, and mostly done by brokers, intermediaries who are good at creating content, but the information is not always perfect. And so I am trying to grow my YouTube channel. So it'd be really cool if you can go to SBA Ray and subscribe to that and get some more information that way. But for my day job, which is an SBA lender, you can reach out to me by email, which is rdrew@fundexsolutions.com.
SBA Ray. I'm going to look you up right now. Hey, there he is. Awesome job with a nice suit. Talking about
there's no suit there.
his massive what did you call it? You're you're obsessed with SBA. Dude, that is so cool that you found a industry that you love, serving people you love, and doing that. As you're going along and we're doing this interview, what questions should I've asked you that I completely screwed up and did not ask you?
Well, I'm guessing there's folks here that might be interested in doing a deal and they're probably thinking, can I get one of these to buy a business? If you're thinking, can I do this? I mean, I'll tell you from the buyer standpoint, you need 3 things in my opinion. One is decent credit. Anything over 700 are fine. If it's like 650 to 700 and there's a story, we'll listen to that too. Cash. So the SBA does require a 10% equity injection. So you got to have enough cash to put into the deal, plus have a little bit of post-close liquidity. You know, no one wants to drain you to zero with the down payment. So cash is important. And then the third thing is experience. And this is the most important thing, because this isn't real estate, right? This is buying a business. They trade at these multiples for a reason, 3x, on average, let's say. And that's because there's a lot of operational risk. So you need to have the type of background that makes you well suited to operate the type of business that you're buying. If you have those three things and you find a business that's financeable through SBA, then yes, this is for you.
Super cool. So fellow deal makers, as always, reach out to our guests, say thanks for being on the show. If you're looking to buy business, buy the commercial real estate or partner buyout, this is the guy you want to chat with. His contact information will be in the little show notes below. So if you're jogging, walking, driving a car, you can always come back and connect with our guest. If you are working on a deal or looking for a deal and you want to talk about it here on the Deal Scout, head on over to thedealscout.com, fill out a quick form, maybe get you on the show next. Till then, talk to you all on the next episode. See you guys.